guys, welcome back. In today's video, we are talking about the major losses for shorts and banks, fake AMC sell ratings, how shorts are buying AMC, and many more in this video. First, we're taking a look at this. Reverse repo hits lowest inventory in 4 years. Watch out for the first bank to sell commercial real estate or bonds at major losses. Keep an eye on AMC and GME too. So one thing that we've obviously focused on has been the reverse repo, and we've quickly covered this in our previous videos, but you can see for the 14th of February, the Friday, it was at $58 billion. So right now, when you take a look, whether it's a 30-day, 60-day, or even 1 year average, what you're seeing is the reverse repo actually decreasing. Now that's of course a good thing for us because it means there's less leverage and liquidity for the shorts and banks. So what we want to look out for is to start seeing news of banks that have been shorting AMC, banks that have been lending to AMC short sellers, to see them start selling their assets, wherever it's CRE or their bonds or anything else, in order to raise money. Because at that point, we can obviously understand that they are lacking money, that they need to cover, that they need to sell their assets in order to raise the money. We've already seen in the past, like Citadel, who needed to sell bonds to raise money to obviously pay back to their investors, but we need bigger signs than that. And of course, that's going to relate to AMC and GME too. When we already take a look at this, you can see how they're worried. So whenever the liquidity is going down, it means that the control over AMC is also going down. Because they don't have the capital, because they don't have that leverage, they aren't able to manipulate and suppress AMC the way they want them to, the way they have been in the past, because they don't have the money. Like, remember, what we talked about is it costs them money every single day in order to finance their short positions, and it costs them money to obviously create synthetics to naked short AMC. All of these things that are used, whether it's the algorithms, it all costs money. And so they obviously need money in order to suppress AMC. And so when we see this is that short sellers are tracking AMC numbers very carefully. Advancing the sell rating means AMC Q1 is likely close to profitability. With concession, popcorn, and cinema suites, a shorter is worried about hoping a little FUD might help them. Spoiler, it won't. So when you take a look at the quarter-to-date box office for Q1, you'll see that we are at $765 million. Now, this is obviously very good. And so whilst you can make the argument that we are still slightly lower than 2023, you have to understand AMC is now in a position where even if the box office numbers aren't as big before, they are actually still able to make the same amount, if not more money. And so the very fact we are still seeing such a large number at 765 million, and understanding how AMC is able to operate, how AMC is able to make profitability, we are seeing how fundamentally they are improving. And so that's very likely for why we are seeing these sell ratings. Remember, we just talked about how they're lacking the liquidity to suppress AMC. And so they obviously need to find other ways. If they can't do it through over leverage shorting AMC, they have to obviously do it with news to try and persuade people, to create incentive for people either to stay away from AMC, therefore less buy pressure, or for them to sell the AMC shares, therefore, of course, more sell pressure, and they are able to buy up real shares to obviously create more synthetics. And so that's the reasons for why they are doing this. And again, we've seen how banks have used the media, how shorts have used media in the past before, which they've admitted to obviously to make it their own benefit. And so these news that we are seeing are very likely to be used for the short's benefit. Another reasons for why they're worried, and again, we covered this, but we want to talk about the two reasons for why they are worried. Firstly is the fact that they are seeing how AMC is going up in price. Now, that means that firstly, people are buying, and secondly, they can't suppress. So we talked about the 48,000 AMC call contracts that ended in the money at 350 strike price. And so will market makers hedge? If they think there's a risk that many owners will exercise their calls, it's possible. So they're worried about multiple things because firstly, people are just buying AMC, and that's why they need to use the news. The second part is that there are more and more volume starting to come into AMC. Remember, if these 48,000 call contracts was to exercise, now the possibility of every single one of them being, of course, exercised is very, very low, but there is that potential that a large amount could be exercised, because that would, of course, put short in a very bad position. And so that's why they are worried. And so what we talked about with, and you can see the correlation right now, you can see that the links in between the two with how they aren't able to keep AMC below max pain. They aren't able to keep AMC above or below these strike prices because of the fact they don't have the liquidity. So you can see how liquidity has always been used in order to suppress AMC. Another thing is understanding how short are increasing their positions and potentially covering. So Citadel increases GME position by 52% as of new 13F filing on February 14, 2025. Citadel has boosted its GameStop holdings by 52.41%, now controlling 3.6 million shares worth $114 million as of Q4 2024, according to the filing yesterday. Why the sudden increase? Hedging, covering, or something bigger? Remember, these are the same market makers at the center of past short-selling controversies. What's their game now? So we've just talked about how without the liquidity, they aren't able to suppress AMC. They aren't able to suppress GME. And we've seen that with the 48,000 calls in the money. Now we're also talking about why they're buying. And that links to exactly with what we talked about. Because they can't suppress the price, they're now starting to buy into AMC. They're starting to buy into GME. It's very likely that not only are they covering, but of course they are hedging. Now remember, Citadel isn't the only short seller. There are of course multiple short sellers who are equally big. We've talked about the swaps in the past, like we've seen with Credit Suisse, like we've seen with UBS, and of course other short sellers as well. So there's something bigger here. Could be that Citadel could be the first major short seller of GME and AMC to start covering and to start actually long, because they understand the squeeze is coming. Because not everyone is able to profit off of GME squeeze, of AMC squeeze. There will be people who have to obviously pay for it. And it could be Citadel, it could be UBS, it could be Virtue, or it could be anyone else. But that's why I'm saying that potentially what we are seeing is that both hedging, covering, and something bigger, all three of these are all included, just like we've covered, and that's why it's happening right now. Now, this is something that I think is very important. So what we can see is that Credit Suisse is stepping away from its membership in the GSD, which is part of the Fixed Income Clearing Corporation. So this means that Credit Suisse Securities will need to close, settle, or transfer any open position in the clearing services before the effective exit from DTCC's GSD. Let's see if they have agreements with counterparties, or if DTCC have some specific exit policies for this kind of situation. Now, for those of you who don't know, Credit Suisse is obviously in the center of attention when we talk about the swaps. It's obviously been a very long journey where we've seen kohrs because of their swaps of GME, and we've also seen Credit Suisse of their swaps of AMC. But the whole storyline was obviously kohrs had their swaps, which was too toxic. They couldn't handle it, and they went bankrupt. And then it was bought up by Credit Suisse. Credit Suisse was then covering or carrying AMC and GME swaps. Now, all two of them were, of course, toxic as well. And Citadel, rather Credit Suisse, wasn't able to handle them. And so they went bankrupt, and it was absorbed by UBS. And now UBS are obviously at the verge of collapsing as well. So we know that they are not in a good position with these swaps. And the very fact that right now they will need to either close, settle, or transfer these positions obviously put them in a very bad position. In the past before, we've covered about how Credit Suisse obviously was on the counterparties for the reverse repo. And something that you'll see is that as they were part of the counterparty, the reverse repo increased drastically. And so at that point, we knew they needed a large amount of money in order to actually even maintain their positions. So the very fact that if we are seeing them either close or settle, we are going to be seeing some massive volatility and volume happening for AMC and GME. But if we're seeing them transfer, I wonder who they'll transfer it to. Again, it's just kicking the can down the road. Like we talked about, yes, they can delay it, but they can never run away from it. And we've seen this with countless amount of short firms. And to go earlier with what we talked about in terms of the CRE, the commercial real estate, you can see here, the CRE apocalypse hasn't even begun yet. the likes of Fortune will understand that once banks won't be able to keep restructuring, the mounting of defaulted and irreversibly impaired CRE debt. And this is why it's major, and it's why I say keep an eye out, because they have been using this as a way of collateral. They have been using these assets as leverage in order to, whether it's to lend out to these short sellers, wherever it's to short AMC. So if we are seeing this to be collapsing, just like how we're seeing the reverse repo going down, and we're seeing how AMC is able to go up, we're seeing how they have to start buying GME, the very fact that we see their collaterals fall, they will have no more money and they will have to cover AMC. And you guys, thanks for watching. I'll catch you guys next time.